We are seeing more indicators telling us the U.S. housing market is in very big trouble. Along with that, there are indicators telling us that the luxury retail sector will also be seeing serious trouble. It's Sunday, July 28, 2019. I want to start off today by thanking every person out there who took the time to write me a letter, who made a donation, who just kept me in their prayers. I want to thank every one of you. And remember, even if you send $1 or $2, it helps me immensely to keep this show going. So again, I want to thank everybody out there for the words of encouragement, the prayers, the letters, the donations. Thank you so much. I'm getting ready to head out back to Orange County to take care of some work. I wanted to make a quick video today before I left. There was a very interesting article in the Palm Beach Post that was up on Zero Hedge today. Foreigners stop buying South Florida homes, sales crash 50%. The Southern Florida real estate market has been softening over the past several years. And I find this article very interesting because this isn't just happening in South Florida, it's happening in Los Angeles, it's happening in parts of Orange County, it's happening in parts across America. Foreign purchases of U.S. homes from April 2016 to March of 2017, this is nationally now, was $153 billion. Those are national numbers. By the year ending March 2019, purchases plunged to $77.9 billion, according to the National Association of Realtors. Florida transactions involving foreign buyers fell to 36,000 in the year ending in March 2009, down from 50,000 the previous year, and down from 60,000 transactions in the year ending March of 2017. So they're seeing a drastic cut in foreign purchases. South Florida is a large destination for foreign buyers, accounting for 20% of the 183,000 international transactions over this past year. So, I mean, think about that. 20% of all the foreign national transactions are happening in South Florida, and they are seeing sales falling off of a cliff now. Many foreigners are abandoning the U.S. markets with home prices approaching bubble territory. Think about that for a minute. The foreign buyer is seeing that. What we are seeing with what's happening in Florida is we're getting close to the top of this market, of this housing market, and the foreign buyers know this. They're more savvy, they're more sophisticated, and they're more educated with finances, with these markets than the average American. See, the average American, while they're trusting that their pensions are going to be there, while they trust that their money is safe in the bank, while they're watching football games and watching reality TV, the foreign investor, the foreign buyer, he's following what's happening to the global economy. He's following what's happening to the U.S. economy. The average American is dumbed down and doesn't even care, naive, oblivious to what's coming. And they're going to pay a huge price for it. And we are seeing the foreign investor getting out or not buying here in America. Now ask yourself, if the foreign money, and really ask yourself this, if the foreign money was not being pumped into America, propping up these real estate prices, propping up sales, where would we be right now? Ask yourself, where would this real estate market right now, when you see what the Chinese buying luxury real estate homes in Los Angeles, mansions, palaces, the Chinese coming in and buying golf courses, they bought up tons of golf courses out here in the Palm Springs area. They bought the Montage that I was just at last week visiting. They've bought up all these luxury resorts. They own hard assets. And if they were not coming in and buying all these homes and resorts and golf courses and farms, where would we be right now? Who would be buying all this? So in my opinion, a lot of the real estate market has been propped up by these foreign buyers. What about financial institutions propping up these markets? We take Blackstone. We take hedge funds, investment companies, banks that have come into areas of Florida and have come into to areas of California. They've come into areas across the country. I know that companies like Blackstone and other financial institutions and hedge funds, they can come in and buy thousands of homes at a time. This is why, as a person who has worked in Orange County, a person who has lived in Orange County, California, I can tell you from experience that most people in Orange County now rent. They do not own. 50% of Orange County homes are rental properties. They are not owned by a private individual. They are owned by a financial institution that is renting that property to these people. See, Americans are evolving into renters and leasers. They lease and rent cars and they lease and rent houses because they no longer can afford to be owners. And so this is why we see a majority of people in Orange County and other areas, a majority of Mercedes and BMWs, a majority of these vehicles are rentals. People don't own these. They're not making a car payment. They're making a lease payment because they can't afford to drive these vehicles. They can't afford to live in these neighborhoods and buy these houses, so they have to lease or rent. And so we're watching America downgrade into renters and leasers because the average American can no longer afford to actually own anything. When you're living paycheck to paycheck, when your wages aren't keeping up with the cost of housing or the cost of a loaf of bread, you stop evolving into being a holder of assets, to actually owning something, to having money put away, to having a net worth. You're now just going to be renters. When you start doing your due diligence, you start finding that a lot of these real estate markets across America have been propped up by financial institutions like Blackstone, who can come in and buy thousands of homes at a time, and many other financial institutions, wealthy investors, other financial groups coming in and buying massive amounts of homes. But some of these institutions can come in and buy thousands at a time. And what that's doing is it's propping up the markets, it's propping up sales, it's propping up the price of a property. They're coming in, they're buying commercial real estate. They've come in, they bought condos, apartment buildings. And so this isn't the average American coming in and buying real estate. These are hedge funds. These are financial institutions. These are banks. They're coming in and they're propping up these markets, and it's making these markets look a lot healthier than they are because the average American can't afford to buy these homes in South Florida. The average American isn't going to be able to afford to buy a home in Orange County, LA, San Diego, and other parts of the US. So what happens when these financial entities and the foreign buyers stop buying? I believe that probably a lot of these financial institutions are unloading properties now as fast as they can. But what happens when they stop buying, when the foreign buyer stops buying? What's going to continue to prop these markets up? What about the retail sector, and more specifically, the luxury retail sector, which is being completely propped up by international money? In the last couple weeks, I had visited South Coast Plaza in Costa Mesa, California, and I was at Fashion Island, Newport Beach, California, two of the wealthiest, affluent shopping malls in the entire country. Also, one that is near my house, Cabazon. All of these shopping areas have one thing in common. There's massive international money flowing into these shopping areas. And what happens when the international foreign buyer who is slowing down his home purchases and his real estate purchases in America, what happens when they stop spending money at Gucci or Burberry or Bloomingdale's? What happens when they're not buying $10,000 handbags and $25,000 Rolexes? The foreign buyers, unfortunately, are more sophisticated, more advanced, and more educated with what is happening financially and economically here in America and across the globe. The average American drinking beer, watching football games, watching reality TV in La La Land, they have no idea what's going on. While their pensions are being robbed, while their Social Security is being robbed, they're in La La Land, okay? They're in their little bubbles, just putting all their trust in the banks, putting their trust in their pension, putting their trust in their banks, in their jobs, while the international buyers, the foreign buyers, they know more about what's happening in your economy than you do. My concern is what is going to happen now to the luxury retail markets, as I believe that is going to start drying up too. What's going to support the South Coast plazas, the Fashion Islands, the Bloomingdale's, the Gucci's, and these really high-end stores? I think that there's big trouble on the way in the luxury retail sector as the international money, the foreign money, understands that we are heading into a global slowdown, possibly a global depression. And these people, I believe, are much smarter than the average American, and they're going to cut back and they're going to stop spending, where the average American cannot stop spending. Most of these people don't use credit, okay? They're using cash, where the average American is using a credit card. And if the average American doesn't wake up and follow what's going on with this global economy, not just the US economy, but the global economy, because it's all connected. If we do not wake up to what's happening, you're going to be part of the wealth transfer, okay? And we are going to witness the biggest wealth transfer the world has seen. And unfortunately, a lot of these foreign buyers, a lot of the Asian market is waiting for the average American, the dumbed down American, to keep running up their credit cards so that they can buy your house at 20 cents on the dollar. And, you know, if you don't believe me, that's fine. You can continue to drink the Kool-Aid and live in your little bubble. But I promise you, your little bubble is about to get popped. And for the people out there who are not ready for this, it's going to be an incredible time. The global recession has begun. It's going to be very interesting to see how all this plays out. But put down the beers, put down the football games, put down the reality TV, and come to reality. Because if you're not prepared for what's coming, it's going to be a very, very ugly time for you. You're going to be a casualty of an economic collapse. You could be the casualty of violence here in America as things are going to erupt, as the pensions go broke, as Social Security goes broke, as your dollar continues to be devalued, while the foreign investors, the foreign buyers, the Asian markets are hoarding precious metals. People here continue to hoard and acquire more debt. You don't have to be a rocket scientist to figure out who's going to win this. The average Joe Blow, who's going to watch football all season, drink beer, and smoke dope, he's going to lose. Because the foreign investor, the foreign buyer, the Asian money, they're going to sit and continue to save money. They're going to continue to acquire precious metals, and they're going to be patient, and they're going to wait it out because the sales are coming to America. We're going to see a massive real estate crash occur again here in America, but this one will be much bigger, much deeper, and much longer than the last one. And I think a lot of the foreign buyers realize that. Same thing will happen in Canada. Canada's sitting on a massive real estate bubble, housing bubble right now, running up massive amounts of debt over the past decade. It is a ticking time bomb up there. For the people out there who are saving money, for the people out there that are acquiring hard assets, gold and silver, who are paying their debts down, getting debt free. You know, I measure wealth not with what somebody's driving or where somebody lives. I measure somebody's wealth on how much money they owe. You could live in a Cracker Jack box and owe zero money to anybody, okay? And I think you're much wealthier than the guy living in Newport Beach who owes $2 million on a house when he's making $150,000 a year and leasing a Mercedes. No net worth, tons of debt, ticking time bomb. You don't want to be that guy. Nice houses are great, beautiful cars are awesome, but if you cannot write a check, or you're going to be so upside down in debt and become a debt slave to impress people you don't even know, you're an idiot. This is the time to be saving money, hard assets, getting the debt unloaded. Be debt-free and wait, because you're going to witness biblical events taking place in America. And you know what? You will be able to prosper. The person loaded down with debt is going down. The person with no debt and assets and some money saved up, you are going to prosper and you're going to do very, very well. Number one, you're going to survive the collapse, the depression, the recession, whatever you want to call it. You're going to survive it and you're going to prosper because you're going to see deals and sales in America that you never thought were possible. And that's the problem. People think it can never happen to them. It can never happen to America because history doesn't apply to America. Have an incredible week. Make sure you're topping off all preps. Make sure you're getting your bills paid off, your debt paid off. Make sure you're buying some hard assets. SD Bullion, link down below. They're my go-to. Again, I don't care where you get it from. You can go get it at the pawn store down the block. Just make sure you have some hard assets put away for a rainy day, because big times, serious times, dangerous times, and that rainy day is coming to America. Prepare.